SCHD is widely considered to be the best dividend ETF in the world. It pays high growth dividend income with a 3.5% dividend yield and a strong total return. Plus, it has a very low expense ratio. This is by far the most popular ETF when you follow a dividend investing strategy. So far in 2025, it's up 1.8% year to date, while the S&P 500, which is the most popular index fund overall, is down 3% year to date. Plus, SCHD just announced their Q1 dividend or distribution, which is up over 22% year over year. We have to keep in mind that they just had a 3-to-1 stock split. So dividend investors are going a little wild about this. In dividend social media, which it's kind of crazy that's even a thing, it seems like the only investment anyone talks about is SCHD. If you go on the dividend Reddit, which is pretty huge with 700,000 members, almost all of the posts are about SCHD. And if someone's positive or negative about it, they are very passionate. People go as far as to say, I'll stand on my SCHD hill and die there. Even on platforms like dividenddata.com, SCHD is the most popular ETF ahead of the S&P 500. So why are dividend investors so obsessed with SCHD? I'm a dividend growth investor that actually doesn't own SCHD, so today I'm going to try and give you an unbiased look at the ETF. I'll take a full look at its dividend history and methodology. I'll compare the total return of SCHD to the S&P 500. I'll give an updated look at the stocks which make up the ETF. And of course, I'll give my answer as to why I think SCHD is so loved by dividend investors. If you stick around to the end, I'll show you how much 1,000 shares of SCHD would pay you a year in dividends and how often those dividends would come. Plus, I'll forecast what 35 years of dividend investing in SCHD would look like for a long-term dividend investor. And I'll give you a little bit of a hint, the results are pretty amazing. So let's jump into the analysis. First, I want to give you the number one reason why I think this ETF is so popular. And that fundamentally has a lot to do with why ETFs are popular to begin with. It gives people easy access into investing. You basically have to do no research. You don't need to analyze any stocks. All you have to do is focus on your ability to continually invest into the stock market. So ETFs are a simple personal finance strategy. From stock market legends like Warren Buffett all the way down to me, I always recommend for the average person that they should probably just dollar cost average into the S&P 500. However, if you want to follow a dividend investing strategy and you want higher yield and the ability to retire off of dividend income sooner, then SCHD is a very attractive option. That's why you have so many people on Reddit saying, why not go all in on SCHD? And whenever someone posts something negative about SCHD, even mildly, there's basically wars in the comments. They even go and attack the source like Seeking Alpha. Seeking Alpha more like seeking clicks to their website. Kind of funny. I like Seeking Alpha though. They do a good job. SCHD has basically become a movement for a lot of stock market investors. And the reason why is because that growing passive income is attractive. SCHD is the gateway for many people into the dream of living off of dividends. It's a simple solution for that idea that you could one day live off your dividend income. As Fung Bro 2 says, I'm getting tired of working. So let's take a look at SCHD. The current dividend yield based on the trailing 12 months is 3.49%. This is significantly higher than the S&P 500, which is 1.39%. And if we look at the SCHD dividend, it actually grows far faster than the S&P 500. In 2024, they saw a 12.2% increase year over year. 2023 was pretty bad for growth. They only increased 3% year over year. The year prior to that was 13.9%. And with the strong start to 2025 for SCHD's dividend growth, people are expecting another strong year. And as you know, I'm often analyzing dividend growth stocks on this channel, and finding something with a 3.5% yield growing over 10% is quite rare. In fact, I can ask my AI analyst to find how many stocks are even in that category. So I just did a little prompt asking to find US stocks with a 5-year dividend growth rate over 10% and at least a 3% dividend yield. And there's a few. You had things like Morgan Stanley, Texas Instruments, NextEra Energy, ConocoPhillips, UPS, Target, Hershey. Now, what's interesting is when we go and look at which stocks are in SCHD, a lot of these are in there. The holdings of SCHD just got updated, so you can see the changes right here on their website. The top holding is ConocoPhillips, ticker symbol COP. That's 4.64%. That's followed by Chevron, Verizon, Coca-Cola, Bristol-Myers Squibb, Altria Group, Cisco Systems, PepsiCo, Amgen, and AbbVie. And this just got changed. My AI analyst didn't even get updated yet with this data. That will likely happen in the next few days. But you can get a brief look at how things have changed. Before, AbbVie and Amgen were the top holdings, followed by Coca-Cola, Bristol-Myers Squibb, Chevron. Pfizer used to be up there, is now out. Verizon moved up in that ranking. Cisco is still there. Texas Instruments still there. BlackRock is out. PepsiCo moved up. Altria Group moved up. And a lot of these lower stocks are still actually in the index as well. So overall, it's a diversified basket of dividend-paying stocks in the United States. And if you're wondering what SCHD is based on, it tracks the index of the Dow Jones U.S. Dividend 100 Index. And the qualifications to be that is you have to have 10 consecutive years of dividend payments, a market cap of $500 million, and an average daily value traded of $2 million. And they have this whole methodology to construct the index based on free cash flow, debt, return on equity, dividend yield, 5-year dividend growth rate. And then they basically score and rank these stocks. And this is where we kind of start to get into my problems with SCHD. And that's that I don't think a lot of these companies are good investments right now. At least not at today's price, which is what these just got recomposited at. And that's long been my concern with SCHD. Pretty much every single time I crack open this ETF to go look at what it actually owns, the businesses that are actually behind the ETF, I'm not usually that big of a fan. For example, I think ConocoPhillips is a weird choice to rank as their number one stock in the index. This is an oil and gas company at a time where the valuations for oil and gas stocks is relatively high. They've come down off of their peak earnings, and expectations are that the price of oil and gas are going to come down, which will decrease their profitability. I've analyzed quite a few oil and gas stocks on the channel. Plus, of the oil and gas giants, they do have a history of decreasing their dividends during bad oil markets. However, they have had strong dividend growth in recent years, and in 2022 and 2023, they had a load of special dividend payments. I think it will do fine, but I don't think it's the most attractive thing right now. The same goes for Chevron, Verizon. If we go and look at Coca-Cola, they're reliable, but they trade at a very high valuation. There are many high-growth big tech companies that trade at a lower multiple than Coca-Cola. They just have slower earnings and dividend growth. And if we go and look at my dividend growth portfolio, I have a lot of big tech companies, whether it's Microsoft, Visa, Alphabet, Apple, or Salesforce. But I also have these high-yield companies like the Altria Group and ExxonMobil. Now, yes, ExxonMobil is an oil and gas stock, but I haven't bought this stock really in like 4 years. I was buying this company at a 9.68% starting dividend yield. It is currently a 3.36% dividend yield. So buying it then versus buying it now is a very, very different proposition. And I feel comfortable holding my ExxonMobil stock because I still get a great return on my initial investment. And I continue to hold and reinvest my dividends in ExxonMobil stock. I get 11.8% of my initial cost basis every single year, and that keeps going up from dividend raises. But I don't really find it attractive to buy these oil and gas stocks right now at these prices. This has been one of my best investments, by the way. I'm up 253%, and the bulk of that was bought during 2020. So when we go and look at ConocoPhillips and Chevron at today's prices, it will do fine, but I don't think it's going to beat the market. And the real measure of beating the market is always compared to the S&P 500. That's kind of the benchmark in terms of total return. And when you look at the basket of companies that are owned by the S&P 500, a lot of these are just far better companies than the ones in SCHD. They have more dominant business models with clear paths to future growth. And I'd argue that the valuation of something like Alphabet or Microsoft is far better than Coca-Cola. And this is just how my investor brain kind of thinks. I always try and think about the actual businesses you're investing in and the financials of those businesses. But that's enough negative for SCHD because this actually is a really good investment overall. And it is a strong selection to have as a portion of your dividend investing strategy. Since October 2011, SCHD has a total return of 407%. That is a 12.8% compound annual growth rate. If we compare that to the S&P 500 index over that same time frame, that has a total return of 504% or a 14.2% compound annual growth rate. So SCHD is only slightly underperforming the S&P 500, but you get far, far more dividend income and higher dividend growth with SCHD. If we compare the 5-year total return for both ETFs, SCHD has a 123.2% total return, which is a 17.4% CAGR, and the S&P 500 has a 141.6% total return, which is a 19.3% CAGR. But let me tell you where the story starts to go different. If we look at the past 3-year total return, the S&P 500 is up 30.2%, which is a 9.2% CAGR, and that's from a very bad fall 2022. However, that is still beating SCHD. SCHD has underperformed significantly over the past 3 years, even with the overperformance so far in 2025. Over the past 3 years, they've only had a 17.2% total return. That's a 5.4% compound annual growth rate. Now, I know this is not always predictive of the future, but they're definitely in the past 3 years were quite a few better investment options than SCHD, which is interesting because SCHD became significantly more and more popular during this time. By the way, if you want to look at these total returns, all of this is available in the AI Analyst on dividenddata.com. Just type in SCHD Dividend ETF price performance. Even with this recent underperformance, I would still say that SCHD is probably the best dividend growth ETF. So let's do a test investment in SCHD to see what you would get from buying, let's say, 1,000 shares. And then after that, I'm going to project what 35 years of dividend investing with SCHD actually looks like. So if you bought 1,000 shares, that would cost about $27,750 to acquire at today's price. And it would pay you over the span of a year $995.20. And this dividend will likely grow by 10% a year. SCHD is a quarterly dividend stock, meaning that it pays every 3 months. So this March, you would expect a SCHD dividend. Then you would get your next one in June, followed by September and December. And that would likely be rinse and repeat in the coming years. But the real thing that powers the total return of SCHD is reinvesting your dividends. That is where this thing becomes a compounding dividend growth machine. So as an example, I have this dividend calculator that forecasts 35 years of dividend reinvestment. And this is all available for free, by the way. You can click the link in the description and pin comment to get to the calculator. We input the stock price, $27.75, the current annual dividend, which is $1 per share. And let's say we expect 10% annual dividend growth. And we'll be slightly more conservative with stock price growth. We'll put 7% annually. So we're going to project what a monthly investment in SCHD of $1,000. That's something that everyone could do. It's pretty realistic. And we're going to reinvest those dividends. So let's click calculate and see what happens. And the results are pretty fantastic. In 15 years, you would have invested $180,000, and that would have an estimated total value of $472,000. And every year, you'd be getting $21,912 in annual dividends. So that would be a 12.17% dividend yield on your cost basis. Now, what's interesting is SCHD has been around for about 15 years, and if you go back to that initial tranche, you would have about a 12% dividend yield on cost. So far, this lines up with reality. But what if this performance continues into the future? By year 35, with only $420,000 invested, you would have a total value of $8.3 million. And you would be earning $638,000 in dividends every single year from your SCHD investment. So again, this is an estimate and doesn't take into account taxes. But if you reinvested all your dividends, you'd be getting a 150% dividend yield on your cost basis. And it's this compounding dividend income, which is the reason why so many people love SCHD. It's a simple solution to high dividend income for the future. In the span of 25 years of reinvesting dividends and investing $1,000 a month, you could be earning 6 figures in SCHD dividends. And it's for that reason why I don't really get mad at people getting a little cultish around SCHD, because I get it. It's a very simple solution to follow a quality, long-term dividend investing strategy. If you want to reliably live off of your dividend income, SCHD will probably get you faster than something like the S&P 500. However, your total return may slightly underperform. But honestly, that depends how both the ETFs evolve over time and what the actual businesses they own are. As an example, if all these stocks in the S&P 500 became insanely overvalued, then the S&P 500 could underperform for a period of time. And this is the game of investing. You can build wealth by owning some of the best businesses in the world and building your own little compounding machine. If you found this video to be interesting, be sure to leave a like and subscribe to the channel. I'll be doing a full update on my personal dividend growth portfolio later this weekend, so be sure to check that out if you're interested. And if you want to use the research tools I showed today, it's all available at dividenddata.com. The link is in the description and pinned comment of the video. If you join right now, you can get 50% off the annual membership. We have a special March Madness sale going on. That's going to end very soon. I'll give you a hint, the end of March. So if you want to get access to that sale, the link is in the description and pinned comment of the video. Thanks for watching, and I'll see you in the next one.